Morning, good morning, Stock Twits crew. Hope the chat is doing good this morning. We are getting another morning of movement here. Plenty more bank earnings kicking off. We got Morgan Stanley. We had TSM last night, Bank of America, US Bank, all kicking off doing their earnings calls right now. And we had some data this morning as well. Some retail sales came out. Looks like they were slightly lower, and then jobless claims as well came out slightly higher than forecast. So market's getting a lot of movement right now. We were getting some movement to the downside. Now we're bouncing back at the moment, but feeling good for the Thursday. How we feeling, Shy?
Yeah, I'm feeling good, mainly driven by TSM's really strong earnings last night. It gave me somewhat of, again, like they're always the first kind of AI player to report every earnings cycle, and they are the invisible web behind the new digital economy. If they're struggling or if they have any kind of bearish commentary, it's gonna have a ripple effect across so many different growth tech industries. So, love to see that they report really strong numbers. Their guide was slightly lower, but that's primarily driven by their smartphone, so it's not really AI related because it's very web based right now. Regarding the data released this morning, it wasn't that great, in my opinion. It showed that it's not. First off, it wasn't great for consumers. It showed that retail sales is below expectations, jobless claims increased, and you're seeing the 10-year treasury yield again, the one benchmark I look for any kind of macro data we get in the morning, because that is the ankle weights that are it's holding the market bounce back. It spiked. So if it holds this level around 4.67, 4.7, I just don't think the market's going to really move much today. So I'm watching out for that. And although it gave back that gain since that print this morning from the macro data, like it's still up today. So I think yesterday was almost like a dead cat bounce, where it was so oversold TLT, which again is the strength of the dollar, 10-year yield, etc. That it was almost like a dead cat bounce. Like it was way oversold already. We had some good data that justified a bounce, but now we have to see where it goes from here. And a lot of people that I speak to like aren't really sold on that bounce yesterday as much. I think maybe it's a bull trap. And that's something to be cautious on. And I think we are in a wait and see area where it's earnings. We have to wait till earnings. And next week, we really only have Netflix as the big tech earnings play. But after that, that's when it really picks up. So we might be on a somewhat of a pause period until then.
Yeah, gonna be interesting. I'm kind of feeling the same way as you. Like I'm a little short term bearish this morning, especially since that data came out. But we'll see what happens going into the morning. Let's recap with what happened yesterday on the daily rip. There's the heat map. A lot more green today. I'm noticing since the past few days. So like to see that in the tech sector. Nvidia nice and strong. Google nice and strong. Meta, Tesla up 8%. So looking good here. I love to see this from the market. But like we said, right, is this just like a dead cat bounce to maybe go lower here soon? We'll see, I guess. But yeah, I mean, any other thoughts on the heat map here, Shy?
I think I just don't think like we're gonna get those V-shaped recoveries like we were accustomed to in 23 and 24. Like I think
It definitely feels
we
different.
bounced at a key level. Yeah, it feels different. It feels ankle weight. Again, like I hate keep saying that term, but like it's feels like when we're jumping or it's trying to explode, it's not as explosive as it used to be. And I get it. Like I'm saying this after we had a what 2% day in Qs yesterday. So I'm like, what is a schmuck saying? Like we had a monster day yesterday. I just think the QQQ got pulled back 8% in a matter of a couple of weeks on nothing really much except for the strong dollar. So I think that was again yesterday was kind of a dead cat bounce a bit, and now it's just I don't know. It feels like in the characteristic in 24 and 23 was just like we would recover from this kind of 8% dip in a matter of days, sometimes like a week or two, and then retest its previous highs. I just don't see us V-shaping like that anymore. I see it's like we bounce. Now let's see what happens. But like, it's not going to be a boom boom anymore, and it's just going to be choppy. And
Well,
I
if
don't know.
anybody
We have
remembers,
to be
I
more
mean,
patient.
think back to to some of those nasty days we saw just a few months ago, right? I don't know if anybody really remembers, but like a lot of the time you'd see us sell off, like any days that we did really get any sell offs, we'd sell off all day. And then that last hour, that last 30 minutes, you'd see those bulls just come in and basically completely recover the move. We saw that multiple times, right? And we're not seeing that on the days like we're selling off now, really. So it's definitely a little bit of caution in my mind. Just again, going into the new year, we got a lot more volatility this year, so gonna be interesting. Why CPI gave bulls the green light? Bulls cautiously bought back into risk assets yesterday, following cooler than expected producer prices, hoping for more good news on the inflation front this morning. And luckily, the December consumer price index reported delivered the goods. Headline CPI rose 0.4% month over month and 2.9% year over year, essentially meeting expectations. However, core inflation rose just 3.2% year over year, narrowly beating the 3.3% outlook. So, shelter prices, which account for 1/3 of the CPI weighting, rose 4.6% year over year, representing their smallest 1 year gain since January 2022. So, obviously, again, the market liked it yesterday. But I think we're seeing, a little bit more digestion going into today, and then we have this more data that just came out with retail sales and jobless claims. So something to watch out for the morning. But any more thoughts on the CPI print?
It relieved a lot of heartburn. I
Yeah.
could say that because I think that was like the ticking time bomb, maybe straw that broke the camel's back on the back-to-back like poor data point. Like with the 10-year Treasury yield like almost approaching 5%, like that was maybe the catalyst to take it there, and it wasn't. So that was like provide somewhat of a relief rally we got because it wasn't as worse as feared.
Yeah. Moving on. What do we got? What have we got? Hindenburg Research hangs up its cleats. Famed short seller Hindenburg Research announced today on X that its founder, Nate Anderson, has decided to wind down the firm. Nate and his firm rose to national prominence after uncovering fraud at electric vehicle startup Nikola when it accused the company of rolling a prototype of its electric semi truck downhill. That's not good. Damn. Some of the short sellers' other targets since launching 2017 included Smile Direct Club in 2019, which it accused of carelessly cutting corners in a field of specialized medicine, went out of business in late 2023. Indian conglomerate Adani and Ishan Enterprises in 2023, questioning the accounting and business practices of two of the world's wealthiest investors. And then SMCI in 2024, when it uncovered what it said were accounting irregularities. Today's note expressed gratitude for supporters during the wild ride he's been on since launching the firm, while signaling his reason for stepping back is primarily to start a new chapter where he spends more time with his family and those he largely ignored while focusing on his business. So interesting stuff with what do you think about that, Shay? That's
I mean,
interesting with the Hindenburg
I
Research.
speak to a couple investors who are really in the weeds in the on the street in the market on a regular
Hmm.
basis, and like they're communicating to me, the market might be approaching a melt up mode, type of scenario in the next couple months. Um, and it's just like I don't know, I see commentary that, oh, is this the top of the market when you see like a short fund like Hindenburg, which again was I respected a lot of all the short funds out there. Like they're on the top list of like what I respected on their content, not Scorpion, who's just an idiot. Scorpion Capital is a fucking dumb firm, but Hindenburg is respected. So I'm like, ah, man, that sucks because like I do think we need that balance in the market consistently. It can't just be opium. I can't just be bullish like tones. Like we need some bearish tones to offset it. So I disagree. It's a top signal on a market, but I'm disappointed, and I understand like he wants more family time. Like you can't blame the guy, but I don't know. Maybe have someone else like fill your role and like you just advise like don't shutter it down type of thing. But it
Shut
is what
it
it is.
down.
Yeah.
Other noteworthy pops and drops. We had some names getting some big moves. Vertical Aerospace up 30%. The firm announced that Domhnall Slattery returnal as chairman of the board of directors. He previously served as chairman from January 2022 to August 2023, and has over 30 years of global aviation industry expertise, that's good. That's something you need when you're running an aerospace company, I would think, right? So Good stuff there. Wolfspeed up 39%. The chip maker completed a previously announced at the market stock offering, generating approximately $200 million in gross proceeds. Intuitive Surgical up 8%. Shares hit new all-time highs. We got Keros Therapeutics down 15%. Company neared new all-time lows after it voluntarily halted dosing in the mid-stage trial of its Intercept drug for pulmonary arterial hypertension. We saw that a while ago on one of I forget how long it was, probably a few weeks ago. But I remember hearing about Keros and that pulmonary arterial hypertension trial that they're doing. And it doesn't look like things are going as well right now. So Robinhood up 10%. Shares hit 3-year highs after Morgan Stanley added the retail brokerage to the firm's financials finest list. Love to see that for Hood, especially if that's a long-term name you're holding. Hood's just done so well over this year. I'm excited for 2025. See what it's got in the store for this year. Trade Desk made the list up 3%. You got any names that you're really looking at that are standing out
Yeah.
to you here?
Uh, ISRG. ISRG is the one who got away from me. Valuation made me get out way earlier than I should have. This was years ago. If you guys don't know, they essentially have a monopoly in robotic surgery. It's a really interesting angle on physical AI. They were kind of the first movers of physical AI, technically, if you want to, because they've been doing this for years and years. Just look at their chart. It's insane, the chart they've had in the past like 15, 20 years alone. I've been waiting for any kind of dip for the past, like, I'm not exaggerating, like since 2021, 2022, been waiting for a dip on this name.
That's
Something
patience
like,
right there.
yeah, something towards a 200-day SMA or some like 25 to 30% correction on all-time highs. It has not allowed that to me. It's just like one of those companies that got away and it's fine. But that's why finding companies who are undergoing a structural shift in an industry that has a defensible moat is the best characteristics of any investment. ISRG is an example of that. Like, doesn't matter how expensive they might be on a valuation front, they're going to have pricing power because of their moats, and it's going to continue exceeding expectations, continue growing year after year, and continue to innovate every couple years as well. So that's a good example for me to like hold on to some positions, even if valuation is way extended. Hence why I'm not selling my Palantir position. Hence why I'm not selling my Axon Technology position. Hence why I'm not selling my Cloudflare position. All those three names, nosebleed valuations. But I'm not selling. ISRG is a great example of that. Robinhood, I'm bearish in the fintech space, but Robinhood is the only one of the few names that I actually can see a moat and differentiate between them and other fintech names out there. UI experience an absolute moat. They make people come back every single day into their platform. That is a huge advantage, and you're seeing how aggressive their management has become the past year or two on what's the next frontier, what's the next innovation we can do. Let's expand our TAM, and there's so many levers they can pull to expand their TAM that I think they're doing it in a really responsible way as well. It's not just at the price of the shareholders' equity. Like they're doing a great job. So I'd love to see that. I just don't. I'm not bullish in that space, so I'm not participating. But I can respect a moat when I see one and they have one. Trade Desk. I mean, Jordan, that's like in your neighborhood. Uh, so I love to see that acquisition. It's the third ever acquisition they've ever made. I think this is something that's going to be interesting because the way Sincera is, it's like high quality data, but that's not. It's like agnostic, where there's no. It's pure high quality, and there's no like manipulation on partnerships or like anything behind the scenes. Like it's just pure raw data that's respected in that space. So I'm hoping that when Trade Desk made that acquisition, they're not going to just like take their assets and put it on their umbrella. They're going to allow Sincera to like operate independently going forward. But either way, I mean, Trade Desk is just strengthening their position for the premier ad tech player outside the wall gardens, and that's a ton of growth avenue right now in a post-agentic AI world where products are gonna 10x, 100x due to all these AI agents. What do you have to do to get those products released? Like you're gonna have to go through these ad tech platforms like Trade Desk to advertise for them. So like it's a ton of runway for this name, and love to see it.
Yeah, shout out Trade Desk. I drive by the headquarters like almost every day.
My,
And it's a great
my
stock to trade. Love the options on that stock. So
So my fiance is like thinks I'm really dorky about this, but like I geek out on like stadiums, like NFL, NBA stadiums, but I
Oh,
also geek out
absolutely.
at like stock headquarters. So like
I
I
know.
took a
When you
photo in
see
front of the
like a
trade desk.
stock you trade, the headquarters, I get all psyched. I know. I'm the same way. It's funny.
Yes.
Big day on StockTwits for crypto with risk assets returning to the limelight. Crypto had itself one heck of a day. We saw Bitcoin crack back above 100K. But the real winners were the altcoins. Ripple led to the upside, rising nearly 20% on the day. We've seen Ripple kind of take a little bit of charge over this bit of like a crypto pump that we've had, right? So interesting to see there. Cracked a new cycle above $3 and challenged its highs from early 2018. Needless to say, the StockTwits community sentiment is extremely bullish on Ripple, and an active poll suggests 44% of respondents see it rising to over $10, which $10, I don't know if I see that, but I love it. I love it. I love the optimism. I love the community. I think it's great. I think it's great. What do you think about Ripple, Shy? I used to own some actually. I did get rid of it, unfortunately, but I used to own some.
I mean, I don't know. I think the whole crypto landscape is just crazy to me a bit, but I think anything outside of Bitcoin, Ethereum, even Solana, I'm like, whew, you better monitor. Like, I just don't know. I just don't know. I really, it's just more. I feel like a boomer in the crypto space, 100%, and like I feel like the way I get interested in crypto is more like how grandpa and grandma get interested in Dow Jones stocks. It's so like I just like I'm probably the wrong person to ask about that, but Ripple, look at that performance. Like you can't ignore that 6 month performance. Like that's kind of wild. It's holding up. Like
Yeah.
it's like you'd assume this asset class would pull back significantly if like QQQ pull back 8%, for example.
No, it's
You
been
assume like, oh, this might have a
grinding.
haircut of 50%. Exactly. It's holding up. So like something's working on this thing for sure.
Absolutely. And real quick, if you guys are anybody in the audience that's a little more into crypto, make sure you guys are subscribed to the Light Paper, which is the crypto side of the newsletters that StockTwits drops. So make sure you guys are on there as well as we hit 100K followers on the StockTwits crypto account as well. So shout out to that. Make sure you guys are following that account if you're more into the crypto side of things. But good stuff there. Shout out StockTwits hitting 100K on there, man. That's awesome. A can't miss comedy show for LA wildfire relief. Host Cypher Sounds will be joined by Mark Norman, Sam J, Jim Florentine, John Rudnitsky, Andrew Dice Clay, and more on Thursday, January 16th at 8 p.m. Eastern at the Stand in New York, and everywhere on Punch Up Live. So, StockTwits is proudly sponsoring the event, and all proceeds will benefit the American Red Cross, as it's an incredibly hard time for many people. So let's have some laughs and raise some money for those impacted by this tragedy from all the fires in California and everything. So love to see that going to be given back to the community there. So shout out to that. If you guys are in the area, definitely highly recommend you going. It's probably going to be fun. I wish I was on that side, but I'm not. Me and Shy are not going to be able to attend that, but
Some
maybe
heavy
next
hitters
time.
though. Look at
Yes,
that. I
man.
mean,
Yes.
if you guys watch Entourage, one of my top five favorite shows of all time, like you recognize the individual in the dead center. I'm blanking on his name, but he was Drama's counterpart in
I
that
still
show
haven't
that they're
watched
creating.
that.
I'm so I can't believe you haven't. I'm so envious. You're gonna have a
Gav
great like 1 or 2 weeks of just like binging it.
Gav keeps telling me I'm like one of the guys. I forget who it is. Um, he's like I remind him so much of him. I don't know. I just thought it was funny. I gotta
What
watch
is it?
that.
Is it wait? Is it Turtle? Is it Drama? Is it E? Is it Vince?
Vince, that's who it
Vince,
was.
nice.
I
That's a
think.
great compliment
I
because he's the
think.
movie star.
Let's go. Yeah, but good stuff there. Moving on. Paycheck breaks key levels. Paychecks. I don't think I've looked at this ticker, but nice wedge there, getting some momentum off the lows there. You saw we kind of swept that low like the past few days, and then have displaced to the upside and looking to kind of keep on going towards the highs. So looking good there. I think that momentum looks solid, at least to go to the highs. Let me take a look at my chart real quick. But have you traded this? Have you looked at this before, Shy? Paychecks.
Um, it is. Let me look at my notes. I know it's in the fintech space. That's why
This
I
is not
don't
something I've looked
monitor
at
it
before, to
too
be honest.
much.
But
I know
definitely
it's
getting
in
some
HR.
momentum.
Like it's, I don't know. It's like a Paycom like player in the space, and I
Hmm.
just think there's. I don't know this. I don't know much about this, so don't hold me accountable. Like I just think there's so many competitors in the HR space, especially for like fintech names within it that just like if you expect C counts to reduce in a post AI world or agentic AI world, like I think a lot of these companies are just going to a lot of these industries, niche industries, will consolidate. So it's gonna be tricky.
Yeah, and just
Someone will come out stronger, but I don't know which one.
yeah, and just taking a look at the higher time frame as well, the weekly, this thing can get very choppy. It is trying to like get out of that consolidation, which is nice, but just be aware if this thing gets going sideways, it can do it for a while. But love to see the momentum there. We'll see if it continues. I think it's holding up pretty well in pre-market right now, so
I mean,
something to keep an eye on.
they're printing cash. I'm looking at their fundamentals. Like they have 36% free cash flow margins, and the issue is they're growing their top line 5%. So it's just like a very mature company in the space, but they're printing cash. Like
Yeah,
holy moly, that is like juicy margins.
print it up. What else we got? Small caps primed to lead 2025. Just looking at the IWM here, we see this kind of cup and handle formation, you could call it. Holding one of those moving at that looks like the 50 SMA. So, I mean, for that to play out, in my opinion, it has to hold there because you could argue cup and handle, but how long can that handle go, right? And for me, it's like if you're under that 50 SMA, it's probably not too bullish for that cup and handle playing out, in my opinion. But it looks like we're holding well so far. I'd look for move back to those highs, but you need momentum. You need that momentum to really get going and break out for this to really go, in my opinion. And I don't know. I have a tough time being extremely bullish on the small cap sector. It has its moments for sure, but I have a hard time staying for a long time. So I don't know. What do you think, Shay?
It's banking. I mean, I think regional finance banks are like 33% or 35% of the IWM. So like it's a lot of people reference that as a small cap sentiment, but like it's really driven by interest rates because of that regional finance bank exposure. Small caps are again, they're struggling to take off. Like if the 10-year yield is the ankle weights for the indices, it is an anchor for small caps. Like it really, if the 10-year yield is above 4.5%, like I just don't see a world where small caps will like run. And you're seeing the frustration on like the names in the real estate industry. Like you're hearing Redfin's CEO on conference calls. Like you can sense the tone on his statements of like how frustrated he is that he anticipated a pickup demand in real estate when the Powell started initiate that rate cut cycle a couple months ago, but you're seeing the 10-year yield like go becoming stubborn. Like it's infecting a lot of the behavior for consumers on real estate, and he's frustrated because he thought it would be opening up the floodgate finally after years of just being on the sidelines. I think small caps is it's adjacent to that sentiment. Like, God, why the stubborn 10-year yield and strengthening of dollar is going to hurt a lot of balance sheets on the small cap world because a lot of them are, I think like 40 or 50% of small caps use a variable interest rate. So they are handcuffed to whatever the 10-year yield is, 30-year yield, and there's nothing they can do about it, and it's going to affect their bottom line because they have to pay more and more in interest expense, and that's going to just be a handcuff for quite some time until that goes away. And the way that can maybe go away and small caps could rage like I thought they would in 2025 is tariffs aren't as bad as feared, dollar weakens, the 10-year yield reflects that, and then finally that anchor is no longer there, and you see the small caps run because it's going to be all about the business. But right now, it's still macro, macro, macro for the small cap world, and it's very frustrating as a small cap investor. But I think we're closer to the end of that kind of narrative than the beginning. So just hold on tight.
Yeah, good stuff there. Moving on to the energy ETF at a technical crossroad here, the XLE. Looking to try and get over this 661.8 fib. I don't know. This looks like a whole lot of chop to me. So something with the energy sector. I mean, and you just see it with like even oil as well. I know oil has been getting like a bump lately, but the those areas in the market can just be so choppy and so sideways that it makes it tough for me to like any part of trading on those names. So I feel like when there's short-term momentum, and you're breaking some key levels outside of that short-term consolidation, like great, play the momentum moves. But it's tough for me to really deep dive into this. Let me just bring up the chart on my here, but I mean, getting some momentum off these lows recently, and it's definitely wide enough range that you can trade back and forth in this giant daily range, right? It's just you have to know what you're trading, and you pull up XLE on a weekly, it's completely sideways, right? So that's where the longer term hold on it, I feel like, can be tougher, and you got to just play it accordingly with the range, right? When you're getting to the top of the range, you know, hey, I need to be careful with any longs I have. We might see some heavy selling here, and then, I mean, you can essentially just play this back and forth, similar to how we do trading futures when we're stuck in a range all day. You know, just playing the range back and forth. You can absolutely do this on this type of name. It's just, again, you got to know what you're trading, right? You're not just buying and
Mhm.
holding and, oh my gosh, great, I'm making a ton of money. It's no, you got to be very active on something like this and constantly be in longs, and then you're in short, and then you're in long, right? And if you know how to do it, I think it can be solid to trade, but just gotta, again, know what you're doing there. So, any thoughts on the
Yeah, I mean,
energy sector right now, though?
it's a Trump trade.
Yep.
Trump is very historically been a big tailwind for XLE. So I think as he's about to get inaugurated in the first 100 days, but I think the repositioning is occurring in XLE in anticipation of that, and that's why it's kind of like taking off a bit right now. It's just tricky because also we're entering the summer months as well, and like that's not really a great. It just there's a lot of seasonality weakness we're about to approach in XLE, but I do think like that's why it's catching a bit recently is from that Trump trade.
Yeah, it makes sense. Silver ETF breaking back over the 200-day. I haven't really watched silver um, closely recently, but something that's done very well over the past year with gold. Looking to try and hold these lows here as of now. So if it can hold that 200-day, I think it has a good chance of maybe getting some upside back towards that, 28.50, $30 level potentially. But I'll also say, if I'm gonna trade one of the two, I definitely always go towards gold, just because it seems that it's a little more volume, a little more going on there. But even if I'm honest, recently I haven't touched gold at all, any of that. So not something I'm super focused on, but I do think as long as you're holding that 200-day, you might see some consolidation like you have back and forth here. But overall, I think you're good as long as you're holding that to get some moves back towards that $30. So something to watch out there for. What's your take on silver, Shy? See you
I
smiling.
commodities. I mean, commodities bore me so much. It's
I know,
crazy.
I know.
I think if you're under 60 years old, like there's just so many different areas to
You know
make
what doesn't
money.
bore me? Getting actual silver, getting actual gold.
Oh yeah, I
That
mean,
I
physical
applaud that.
commodities will always be
Love that.
exciting.
Yeah, love that. But yeah, tough for me to really trade or buy any of these names. Nvidia still trapped inside range. Gosh, Nvidia, this poor thing, man. I mean, at the end of the day, though, it sucks to see when we're stuck in a range like this, just because it can be very boring. Especially if you're trading momentum. If you're day trading this, I feel like you don't care. You're just like, hey, we're playing back and forth in the range, like I was just talking about. But if you're a longer term investor, swing trader trying to hold and get a massive move on Nvidia, it's been extremely difficult and annoying lately. But at the end of the day, this is healthy when you see consolidation like this after those big impulsive moves that we've had to the upside. I think this is healthy. I do think there's a bit of just bearish worries going into the new year, like we've talked about, and kind of just seen into the new year here. But we've seen Nvidia hold up throughout this whole big market dip. I mean, everything's holding well. We're inside this big daily range. Even when we get those big sell days, we're holding within this range every time. So I similar to like don't short a dull market. I feel like when Nvidia's dull like this and consolidating above, these big impulsive moves that we've made to the upside, it's hard for me to be heavily bearish. Now, intraday, yeah, I can be super bearish on an intraday time frame, right? But on a longer term scale, I'm really not worried about Nvidia trading the way it is here. So I know you got a lot of thoughts on Nvidia, Shy. How are we feeling? It's been boring lately, but I think it's all very healthy. The price action we're
It's a
seeing
good
in the
point.
higher
It
time frame.
stocks up
Yeah,
like what 10x the past 3 years. I think Nvidia will hit $200 eventually. I think their CUDA platform cemented themselves into permanence on any future tech revolution. There's minimal cyclicality risk anymore, in my opinion, associated with Nvidia. It's not a hardware company anymore. It's far greater now. So they're going to be capitalizing on quantum, physical AI, and all the future frontiers they'll be capitalizing on it. So through their CUDA platform. I think right now it's just Blackwell noise. There's a ton of it. It's more than what we were accustomed to on a stock like Nvidia. So I think the next earnings report will probably reveal relieve a lot of heartburn. So
Market's open. Boom,
see.
boom. Think got a nice bounce from that data print
Let's
pretty
see.
much. So looking decent going into the open, but I'm still on a higher time frame. I still have us kind of stuck in this area where it can be a make or break.
Small caps are struggling right now, and I think it's the 10-year yield is the cause of that. Let's see. What else? Today just feels like a quiet day. It's just going to be a very, very quiet day.
Bitcoin just sitting right back at 100K as well. That was Coinbase. Oh, we finally held the bottom of this range on Coinbase. Been waiting. Been getting too much downside. IQ getting a nasty candle there. It's not looking the hottest there. Ugh. We gotta get some momentum here early on the higher time frames for me to really want to be bullish, or else I'm thinking it could be not the greatest day. But like you said, it could be quiet as well. So we'll see what happens with that. Do we have any speakers? No speakers today. No more data either. I think we're all clear on data. Business inventory is at 10, so maybe a little something at 10 o'clock Eastern, but I wouldn't worry too much about that. Making any moves, Shy?
I'm
Or you got
watching.
any
I'm
eyes on
watching.
anything specific?
Yeah, IWM. They're sitting. So their 21-week EMA is at 223.4. They're at 223.8. They're showing weakness in the near term. Their 10-year yield is showing a lot of strength again. So I feel like if they violate this level, oh, but I didn't make. Sorry, whoa. Oh, sorry. Yeah. So if they violate this level, I think we're gonna retest that 50 SMA on the weekly chart, which is gonna be at 214, and then if we'll see where it goes from there. Like that was the previous bounce point, but I think maybe we could see a 4 to 5% downward move if we show continued weakness, and we're not showing it right now. It's kind of bouncing. So I do think that's what I'm also watching semiconductor names. Let's see what the semis are doing right now.
Someone wants us to take a look at Unity as well.
Ooh, Unity. Yeah, so let's take a look at. We can talk. I can give some color on Unity.
Yeah, get some color on that.
I think there. Yeah, so I think Unity is one of the turnaround stories of 2025. I think they're going to experience an explosive year, in my opinion, after going through. The new management has essentially gotten rid of all the fat in the organization. They treated 2024 as a investment year of like reorganizing itself to go forward in a cleaner manner, in a more efficient manner. I think a lot of people also forget, like, as a classic example is narrative follows price action. Everyone forgets that they essentially power 70% of the top 1,000 mobile games through their gaming engine. They have 2 million active creators monthly. They're going to be if AR and VR takes off, like their engine also is behind 65% of all VR AR content. Like they have an incredible duopoly moat in a duopoly. It's just poor corporate governance that's hurt them past couple of years. They missed the boat on their ad segment side of their business, and you're seeing how explosive that could be via App Lovin'. This performance past year. So like I think Unity has gone through that tough time of reorganizing. It's a very lengthy process, but I think the new CEO is doing everything he had to do. He's making it very developer focused. That runtime fee fiasco is somewhat still relevant because developers are the most stubborn demos out there. They never forget Elephant Brain. But I do think they're doing everything they can to improve from that. And right now they're extremely undervalued. Like I think this belongs over $50, and I think it's going to take maybe some reduction of the SBC. You see some margin expansion opportunity and some actual revenue growth to justify that, and that's going to take probably two quarterly earnings to do that. But right now, I think you have to ask yourself like what's being priced into the stock, and I think it's a lot of FUD, and I think it's actually a lot rosier than people anticipate, and you'll see that in 2025.
Yeah, good stuff on Unity. Not a name I trade, so love that you can give some color on that.
Yeah,
We
like
have
right
10.
now, let's see.
Market's trying to get a bounce at the bottom of the range here, but if we see this continued selling, I could see us getting down to that 350, which is overnight low. Let's see here.
It's I
ES is
might
definitely
do an.
stronger. SPY.
Let's see what the VIX is doing, because I might short the VIX today. I think that might be the play. Or I didn't realize it spiked 10% yesterday. Never mind.
ES definitely seems decently stronger, so I'm noticing that. But these pops aren't super enticing for the long at all. And then on the higher time frame as well, I just have us trying to change structure to the downside. At least I just think that 350, even if we want to go higher, I would like to see that 350 come into play on NQ. But let's see. Don't got really any earnings tomorrow that I care about. But next week, get ready. It's gonna be we're kicking off with Netflix on Tuesday. That'll be fun. Well, a ton of companies on Tuesday, but Netflix is something I'm gonna be heavily focused on. And then the week after that is gonna be nuts. So get ready. We have all the Mag 7 name, or almost all the Mag 7 names pretty much, and Tesla in there as well. So that week is going to be stacked. I'm excited for that. It's going to be a good earnings week. A lot of volatility. I know this bounce looks pretty weak on the market right now. Still holding out of this hourly gap I have. So
Also, you have to remember as well, everyone, like Mondays close the markets. It's an inauguration day. Fridays are usually volatile, draining type of days. Like I think today there isn't much data, speakers, earnings,
yeah,
besides TSM, which we already saw the action this morning. Like I just think it's going to be people usually ahead of a holiday weekends. They just log off early and call it a day and just enjoy the 3 or 4 days off. And I think maybe we might be getting that right now. Uh, just seeing, like, I have to see the SPY volume, but I just I'm just not seeing anything much happening.
no, she looks nasty. ES still holding stronger though, which is interesting because it's kind of been the leader lately on all the moves we've gotten in the market. So just seeing that and knowing that it's been the leader, it kind of makes me think like, oh, sometimes they flip back and forth, right? NQ leads or ES leads. I'm trying to kind of figure out, is NQ flipping to be the leader, or is it lagging the strength that ES has? None of these bounces just look super strong to me and aggressive, but that could change pretty quickly. We'll see. Microsoft looks strong so far. Apple looks very weak though. Nvidia looking weak as well. So normal tech names not looking the greatest. I might bring QQQ down. What's that range? I know more people probably trade QQQ than they're trading futures. So that spot I'm looking for, basically 501.50 on QQQ. Another potential spot would be like 511.70, which is that morning wick from yesterday, actually, right at the market open.
I'm trying to think what to do right now. I think there's somewhat of weird weakness right now. I think TSM saying that they're going to have 40% CAGR for the next 5 years on their AI accelerators. It just like I think it's highlighting how AI is just still so early. I think this year is going to be a crazy, crazy year in software, and I have Snowflake as my top dog, 10%, and I'm like, I had to reduce TMDX this morning, and I'm like, I have a decent amount of funds now, and I just want to figure out how to capture that more in the software space. But also, like, Amazon's only an 8% position for me. I want that to be in the mid-teens for me. So, like, do I add here ahead of their earnings? Do I wait for potentially a pullback? Like, I think physical AI has been the hot topic since Jensen was highlighting that a week ago. Amazon's going to be is quietly the leader in logistics robotics, and that's going to be a the way their ecosystem works. Like they don't really need to sell the robots like externally. They have such a juicy margin expansion opportunity internally that like people aren't pricing them as a physical AI leader because they're not going to sell robots to third parties or like in a similar way like humanoids going to do, for example. But they're still going to be a massive beneficiary because they're still going to be using the physical AI layer just internally. And I think that's going to be a major growth avenue. Who knows? Maybe eventually they might license these robots to their partners. I don't know what it might be, but right now they have 750,000 robots in their warehouses today. It's like physical AI is happening right now for them. So I think this is a name like I really do believe it's going to get hit $300. I just I would love to add love like my pounding the table ad level for Amazon's 180, 185. I really want to get there. I don't know if I'll get there. I really don't, especially with the margin expansion opportunity in the e-commerce side of the business. Compute is on fire right now, and AWS is the best of breed in compute. So like, I think like I don't know. I'm just like thinking about where to allocate my funds, or maybe I just build up a cash position. I think it's gonna be a choppy year, and I do think,
Build up the dry powder.
yeah, build up the dry powder. I will say, like my other compute play, DigitalOcean's up 8% today,
Oh,
which is
nice.
a pure play on
Beautiful.
SMBs. I want to see what was they got a positive upgrade. I did not get a chance to read into that, but let's see what it said.
Who gave them an upgrade?
Morgan Stanley.
Oh,
So
nice.
it's a good fund. So like, here's the note that was said about it. DigitalOcean's largest customers are demanding more product capabilities and company is delivering. Agreed. They've had a ton of innovation fronts in 2024, and they're capitalizing on Gen AI and machine learning for sure. Absolutely. This is my words, not the word, the commentary. Now I'll go back to the note. Without abandoning its developer community, see that Unity? Take notes. DigitalOcean can slide incrementally up market with existing customers. That essentially means net retention rates going up without having it advertised to get new customers. Really bullish time sign. This continued shift is focusing catering to its largest customers should drive continued mix shift toward its scalar customers, bigger customers, yielding faster growth and stronger unit economics. Currently trading at 0.56 EV. No way. They used my metric.
Wait,
Oh my
what?
God. I have an algorithm I use in my model. It's identical. It's so funny. Holy sh! I do EV to gross profit, EV divided by gross profit, divided by growth, and divided by um, margins, and it gives me one score to see like how what's the apples to apples compared to all the other competing
Mm-hmm.
comps out there using all the metrics. They use that. That's interesting. So like they put
That's
zero
awesome.
point 0.6 score and it's below the software average of 0. 0.7. I think that's a little misleading because it's not a software company really. It's an infrastructure player. So I don't love that they use the software comp because that doesn't make sense to me. All right, so DigitalOcean does not price in this dynamic in my view. It trades at 16 times earnings, 100%. It's freaking cheap. And they're right now the market is giving little to no credit to DigitalOcean's ramping AI machine learning strategy. Yeah, what I just said in my own words. And it creates an attractive risk and reward upgrade to overweight. So yeah, $41 price target is what they got on that for DigitalOcean. Um, I just think DigitalOcean, it's one of those names where it doesn't make sense how it doesn't exceed all expectations. And this is one of those names where like I'm so bullish, but also like if I'm wrong, like I might cut bait quickly. Where I've been saying the same rhetoric over and over again on the show. Like, what's going to happen in the post-agentic AI world? Explosion of SMBs that nobody could ever dream of. I can create my own SMB. I can create my 10 SMBs just by myself now. Same with Jordan. Same with StockTwits. Everyone can create so many different companies now using these AI tools, aka AI agents. That like, it's going to be a crazy amount of demand for computes. And DigitalOcean's pure bread and butter is a pure cloud computing play for SMBs. So if my thesis is that in the post AI agent world, DigitalOcean kind of combines everything I look for to be a capitalizer on this theme. So right now they're supposed to be growing at 15% year over year this year. I'm like, I think there's gonna be such an explosion in SMBs and compute demand that there's no way that this doesn't grow 25, 20, 25, 30%, whatever it might be. Like, I think mid-teens is violently understated. So I do think that this is like one of those opportunities where it just makes too much sense. But like, if I don't see it in the fundamentals, like, I'm clearly wrong in my thesis and I should cut bait. And I'm trying to be more vigilant about that because that is my Achilles heel. I treat my portfolio as a romance. Like, every stock I research hours and
He's
hours of
such a
research in every holding.
romantic.
Yeah, I build a conviction and I know the company inside and out, but because I built that conviction and romance, like, I'm just like, it's hard for me to cut bait. I'm bad at breaking up with them. Trying to learn that about myself because the reason I missed out on App Lovin in 2023 was because of Unity. I knew the company inside and out. I loved their duopoly. That made me blind to what App Lovin was doing behind on the sidelines and just the 8x in a matter of those 2 years where Unity's down 60%. That's a missed opportunity, in my opinion, for me that I learned from. Trying to do the same thing for DigitalOcean, but looks like the market is going red.
Yeah, market's not loving it so far. We just took these internal lows on NQ. ES is trying to hold them. It is the stronger asset at the moment, so it might be able to hold, but I don't know. Looking nasty and getting rejection all over the board. And then you have your big tech names. I think Nvidia is still headed to the downside. Yeah, headed to the downside.
It's
Microsoft's trying to hold
semis are
strength, but Apple
semis
weak
are
too.
taking the whole market down with it
Yep,
right now.
yep. So
Not Nvidia. Nvidia's holding strong. No, Nvidia's going red. Yeah, it's just the semis. They didn't like the soft guide, but that soft guide was not AI related. It's shocking. It's feeding. What's the 10-year yield doing? No, 10-year yield's pretty flat. So I don't know. This is surprising. I'm surprised to see this, to be honest.
for any shorts, a nice target is I'm targeting that 352.75, which is on NQ. That's that midnight low, basically, overnight low. Beautiful moves this morning, though. I feel like I know the market hasn't gone straight up, since the new year, and that's obviously probably screwing with people that basically were just longing all year. Here's the thing, last year was very easy in terms of direction. I mean, every pullback we know, basically we knew the market was going up. I mean, buy the fucking pullbacks. That's what we were doing every single time. That 21 EMA that Shay talks about all the time. I mean, every time we got a test of that. Buy, buy, buy. It's not going to be that easy this year. But it's funny, like what I've noticed, just talking with the traders on FinTwit and some of the other people I know, this is a way better environment for all of us day traders. We're actually doing way better right now than most of us were towards the end of the year with VIX at 12, even though the direction's easy, right? So that's the difference for us, and that's what I love to see. I know it can suck for the people that maybe haven't been in the space as long, but I love to see a harder market come around, and it's not just as easy as buy the dip anymore. You got to really know what you're doing, and but the beauty of that is if you do know what you're doing, we're getting so much more volatility and so much just cleaner moves overall. It's been beautiful. So if you have been capitalizing, congrats. There's been some great moves in the market even this morning. I mean, just very clean, clear moves. The market's very clear to me lately. And I feel like when VIX is, at that 12, it's anything but clear, to be honest. It's just a barcode most of the time. So just something to be aware of there. But good stuff. Shy, if you have anything else, feel free, or else I think we're good to wrap up.
No, I mean, just it doesn't look pretty. It just feels exhaustive, and that's like something that's new. It really is. It feels like there's just it's I'm simplifying it, but it feels like this any rally has no passion. It's just like it just feels
It's not like
like
it
it's
was,
just
guys.
exhaustive.
Go on
No.
any replay tool on TradingView, or if you use FX Replay, go on FX Replay. Go trade that time in the market. Go look at the bounces in the market when we get those sell-off days, and then compare them to what we're seeing now. It's just that simple, and you see the difference in the momentum to the upside, right? I mean, you could not short this market a few months ago. It just wasn't working, and now we're actually getting some continued moves to the downside. Doesn't mean we're in a bear market or anything, right? I'm not saying that, but it does mean short term, I am absolutely going to be bearish some days. I'm going to wake up and be heavily bearish, right? Whereas last year, I mean, I really can't remember a day where I woke up and I'm like extremely bearish on the day. So something to keep an eye on. But yeah, great morning. I appreciate the whole audience tuning in as always. Make sure you guys are liking and subscribing. And make sure you guys are subscribed to the newsletters. Those should be in the description, the links for those, the daily rip and the chart art. Make sure you guys are subscribed to those. So, but yeah, have a great trading day, y'all. We'll see y'all bright and early in the morning. Yes, sir. Great show, as always. Oh,
I
rug the
mean,
market, Shy. Rug it all.
dude, I have to communicate to all my subscribers on why I'm trimming TMDX from 600 shares of 400. It's like it's so annoying. But
They're all just leeches.
no, they're all just fucking leeches. I'm like, fuck. I want to add more snowflake here. I'm just I'm just over trading. I might be like turn the screens off type of day. See what else is doing well.
Well, boys, great morning. Today's Thursday, so Shy, we don't have you tomorrow.
No, yeah.
No worries. See, Nate, perfect. I love shooting the show with Michael. It's awesome. Yeah, we're both chart guys. That's why. So we'll talk about a chart for now. Yes, sir. Sounds good.
Whoa, 5 days.
Oh yeah, cause no Monday. Yeah, I'm
Yeah.
definitely gonna forget that, and I'm gonna wake up.